Good morning, everyone. Good morning to all of you. How are you all? So first, let me know, is audio and video both are okay? First, let me know, is audio and video both okay? Are we good to go? I have paid for bilingual language, but I want to change English medium. Okay, I am sharing a number with you here. Do drop a message to this number, Hana. It will be corrected. Do not worry about it. Hana, so you will be, your batch will be changed from bilingual to English medium. Do not worry about it. And I guess you have a Mahapack, Ranjit sir. If you are able to join bilingual and English medium both batches, it means you have a Mahapack. So in Mahapack, you will get bilingual English medium both classes. You just join the English medium batches. Ignore bilingual batches there. Okay, let me know. Have you purchased Mahapack? Sure, let's continue. So this is our first paid class. Today we are going to start the first unit of your, that is an overview of Indian economy. Hana, this is our first class. In an overview of Indian economy, that's your module A, unit number 1. Okay, so you can see here, this is the syllabus of your module A, B, C, D, have Indian economy, Indian financial system, 45 units are there. Out of that, we are starting your module A today, in which there are 11 units. Overview of Indian economy, sectors of Indian economy, economic planning and Niti Aayog, role of priority sector and MSME, infrastructure including social infrastructure, globalization, economic reform, foreign trade policy, foreign investment, economic development, then international economic organizations like World Bank, IMF, WTO, climate change, sustainable development goals, issues facing Indian economy. All these are what? All these are the units of your module A, and we are starting from the first unit, that is an overview of Indian economy. Okay, now let's move forward and discuss the question, discuss the chapter here. The yesterday's PDF is already uploaded. Just go to the your batch, and when you visit your batch, you will find the recorded session there, as well as you will find the PDF with the in the practice notes. Radha sir, it is available in your application. Just go to the batch crash course, just log in the batch crash course, and once you log in the crash course batch, you will find the recorded video of IFS. Hana, how to watch it, I will let you know in the end of the session. Clear? So let's continue here. So this is the chapter we are going to discuss today, an overview of Indian economy. So how evolution of Indian economy happened. So we have a certain data. These data is very important, which tells us like what Indian economy used to be and what it is now. That data we are going to cover. So first of all, according to Mr. Angus Madison database, India and China used to contribute 50.5% in global GDP in the year 1080. Okay, in 1080, the global contribution of India and China was 50.5% in the global GDP. Now, what actually the global GDP is? What is global GDP? So when we talk about global GDP here, first of all, let's understand what is GDP. GDP stands for gross domestic product. It stands for gross domestic product. Now, what is gross domestic product? Gross domestic product means the money value of all final goods and services which is produced within the geographical boundary of a country during a financial year. So let's say this is the country. This is India. Let's say this circle is India. And this circle is a geographical boundary of India. Now, whatever goods and services we are producing in this geographical boundary, whether it is produced by Indian citizen, whether it is produced by foreigner, doesn't matter. Hana, doesn't matter. Anyone can produce this. Whether it is produced by Indian or foreigner doesn't matter, but it should be produced within the geographical boundary of a country. So whatever production of goods and services happen within one geography, within 1 year, under the geographical boundary of a country, the money value of this production is known as your GDP. Is known as your what? GDP. So whatever production you are doing in India and whatever the value of that production is there, that value will be known as your GDP. So let's say in India, we have produced these markers only. Nothing else, we are producing these markers. The one marker is of, let's say, 10 rupee and we have produced kind of, let's say 100 markers. So in 1 year, we have produced 100 markers in India only, and the one marker is of 10 rupee. It means what is India's GDP? It is India's GDP is 1000 rupee only. So whatever production happens within 1 year, within the geographical boundary of a country, that money value will be known as GDP. And if we are saying that India and China used to contribute 50.5% of global GDP in year 1000 AD, it means what? Let's say in the world, if we were producing 100 goods, out of those 100, 50.5 goods used to be produced by India and China together. So that's what the data talking about, that 1000 AD, India and China contributed 50.5% global GDP here. Second, in 1600 AD, 52% contribution was there from India and China. Okay, in which India was 29% and China was 29% and India's contribution was 23%. So in 1000 AD it was 50.5, in 1600 AD it is 52%. Now, after a century, we have seen that China's contribution in the global GDP was declining, whereas India's contribution in the global GDP was increasing, and from 23% to India came to 24.4% of your world output. So this is the data that have been given by Angus Madison, and this is important. All this data have to be remembered. Okay, this is important. Now next we have that at the time of Britishers, the British colonialism, this altered the dynamics. And by 1820, India's share had plummeted to 16.1%. Now, what happened when Britishers used to be in the country? They used to take raw material from our country to Britain, and they used to produce goods and services in Britain and used to sell from there only. So India's contribution was started declining because the Britishers were taking the goods abroad and they were producing their goods and selling from their own country. So India's contribution decreased to 16% in 1820. Now, in the latest data that have been given by IIBF book is about 2021, in which it says that according to IMF, now what is IMF? It is International Monetary Fund. It is the international organization. It helps its member country in the economic crisis time, or we can say in the case of your balance of payment crisis. So whenever any member country of IMF is facing crisis in the country, so IMF will be there to help it out. So according to International Monetary Fund, India's contribution of global GDP reached to 7.3%. Okay, India's contribution of global GDP reached to what percent? It reached to 7.3%. Clear? So the country which used to contribute 24.4% in the global GDP, now it reached to 7.3% only. Okay. Now, however, GDP in terms of purchasing power parity, India ranked third in the world. The first is USA, the second is China, but India's rank is third in the GDP purchasing power parity. Now, what does this mean? Let's understand. Okay. When it comes to the GDP purchasing power parity. So GDP, we all know, GDP means global gross domestic product, whatever production happened within the geographical boundary of a country, that is known as your GDP, right? Now, purchasing power parity, triple P have two full forms. The first full form is public-private partnership. Public-private partnership means when the government and private sector both are working together to develop some certain things or to run the economy. So public-private partnership means government and private sector are working together. when it comes to the triple P purchasing power parities, it tells us what is the purchasing power parity or purchasing power capacity of your currency. So let's say there are two currencies, one is rupee and the another one is dollar, for example. Okay, one is rupee and another one is dollar. So let's say when you compare the purchasing power of these currencies with each other, that is your purchasing power parity. Now let's say $1 is equals to 80 rupees right now, for example. $1 is equals to 80 rupees right now, for example. Now if we purchasing this marker, let's say we are purchasing this marker and this marker's price, one marker is of $1 in USA, for example. Okay, and the same marker when you are purchasing in India, its actual exchange rate is 80 rupees. But in India, there was a 10% inflation. Inflation is there, it means prices are rising. So in India, we purchased this marker at 88 rupees. Because there was inflation in the country, that was a 10% inflation. And 10% inflation increased the 8 rupee of the product. So here what happened? In USA, we are purchasing the same marker at $1. In India, we are purchasing the same marker in 88 rupees. We have to pay 8 rupees extra here as compared to the US dollar. So it simply means that we have to pay more money to get less goods and services in India because there is inflation. It means the money value of your currency is declining. So now you can say that rupees purchasing capacity is less than dollar because dollar is able to purchase the market in comparison to Indian rupee at a lesser cost, as a lesser price. But India have to pay 8 rupee extra. Okay, if you have to pay more money and you are getting a less goods and services on that, it means the money value is declining. So the value of rupee is declining in comparison to dollar. Clear? And that is what the purchasing power parity means. So purchasing power parity means we are comparing the purchasing capacity of currency in comparison to each other, in which India stands at the third rank. First is USA, second is China. It means the maximum purchasing power of a currency in the worldwide to purchase certain goods and services with the US dollar. Second with China and third with the India. Let me know clear? The GDP purchasing power parity is clear to everyone. So India ranked at third, USA at first and China at second. So whatever production we are doing in the purchasing power parity, when we compare it, so India stands at the third rank. Let me know clear. Should we move forward? Okay, yes, chalo, let's move forward. Next we have here, today India is one of the world's fastest growing economy. If there is a country who is growing at a higher level in the world, that is India. So India is the fastest growing economy in the world, and that's true. India is actually growing at a very large phase comparative to the other economies. Acha, I want to ask one question from all of you. If we are saying that India is the fastest growing economy in the world, then why we are not developed yet? What do you guys think? Like, what according to you are the reason why we are not becoming developed country, and why there is a higher poverty in the country and higher unemployment in the country, while there is a India which is the fastest growing economy in the world? Why it is possible? Let me know. Now, the second thing is saying India's economic performance during the British Raj was dismal because the Britishers were exploiting labor, they were exploiting the raw material, and they were taking wealth from India to abroad. Apart from that, a British East India Company was there. British East India Company have taken a lot of money, lot of resources from India, and it ignored the industrialization in the nation, and infrastructure was created not to industrialize India, but to exploit its raw material. So we are saying that at the time of Britishers, India's situation was dismal. The next thing is that East India Company have always ignored the industrialization in the country. They never developed industries in the India. They used to take raw material from India to abroad in their country in UK, and they used to produce goods and services there. They haven't produced, or they haven't introduced the industries in India, manufacturing plants in India. And whatever industries they have developed here, like the railway industries, the railway sector they have developed in India, not to industrialize Indian economy, but just to take raw material from India to abroad. Okay, whatever industrialization they have done in India, they have done that just to exploit the raw material of India, so that they can take raw material from India to abroad and produce the goods and services in their country and sell from there only. That was the Britishers doing. I got only one response, that is population. What about others? Why you think India, after being a fastest growing economy in the world, still is not a developed country? See, if India is fastest growing major economy, India is also a most unequal economy. India is what? India is also a most unequal economy. So inequalities was very much at that time in the country. And still it is. Inequality is very much, India is the most unequal economy. Now, what actually the unequal economy means? Let's say there are two terms. First is economic growth, and the second we have economic development. Okay, now what happened? India is growing. India is at the fastest rate to grow, but whatever growth we have is a jobless growth. India have a jobless growth. That's why we are not able to develop. And why so? Let's understand. So economic growth means simply when the production of goods and services is increasing. If in the country you are increasing the production of goods and services, it means your GDP is increasing. If your GDP is increasing, it means your economic growth is there. Okay, so whenever the production of goods and services increase, it increases the GDP, it increases the economic growth. Clear? That's the economic growth only. Productions are increasing. Now, economic development will be there when the GDP is increasing, but because this GDP is increasing, because of this, we will be able to find some positive changes in the economy. Let's say if GDP increasing, it means production is increasing. If you are introducing production, if you are doing more production, it means it should increase employment also in the country. If the employment is increasing, people will be earning more per money, so per capita income will increase. If people are earning more money, the poverty from the country will be reduced. And if the poverty is reducing, people have money, their literacy rate will increase, their living standard will increase, the infrastructure development will be done. So all these are what? All these are the positive changes that can be there because of the economic development. Okay, so whenever you find the GDP is increasing and it is bringing some positive changes in the economy, that creates the development. And when only production is increasing, that's a economic growth. And in India, this is what happening. GDP is increasing, but it is not giving us any kind of positive changes in the country. And that kind of growth is known as jobless growth. And that's why India, after being a fastest growing economy in the country, still is not a developed country, because we have a growth, but we have a jobless growth. We have a most unequal economy. Okay, let me know, is it clear? What is British Raj? British Raj. Clear? Let me know. All the points till now we have discussed is clear. Okay, clear. Now next we have the basic characteristics of Indian economy, in which World Bank classification is also there. So first of all, what is World Bank? World Bank is the international organization. What happened? How the World Bank have been formulated? Let's see. After the World War II, the global financial crisis were totally erupted. After the World War II, the global financial crisis was in the very bad situation. Global financial crisis were totally destroyed. So US president at that time said that we should rebuild the global economy. We should rebuild the global financial system. And to do that, what we have done, simply in the Bretton Woods is a place in USA. At Bretton Woods, the conference have been conducted that named as a Bretton Woods Conference. Okay, Bretton Woods is a place, name of a place in the USA. There, one meeting have been conducted among the certain countries because we wanted to rebuild the global financial system. And in the Bretton Woods Conference, every country have participated in this conference, and this conference resulted in the establishment of World Bank, IMF, GATT, GATT, General Agreement on Tariff and Trade, and Fixed Exchange Rate System. So these four institutions have been created after the result of your Bretton Woods Conference. So World Bank was first created just to make European countries develop, because after World War II, European countries were at a very lower period, or we can say at a very lowest point of their country. So the first objective have been given to World Bank that develop the European countries. That World Bank have done. And after that, they have given the World Bank the job of removing poverty from the world. So poverty eradication is the main objective of World Bank now. Plus, it also helps the countries to develop. Now, IMF helps the countries in the economic crisis. Whenever the countries of IMF facing economic crisis, IMF help them. GATT, it used to General Agreement on Tariff and Trade. It used to provide us the rules, regulations related to the export of goods. Now, it have been converted into World Trade Organization in 1995 January. So now World Trade Organization is actually making rules, regulations about the export, import of goods and services. And this is the fixed exchange rate system, which used to talk about the exchange rate of the currencies. Okay, so these four have been developed, these four have been established after the Bretton Woods Conference. So this is how the World Bank, IMF, GATT and your fixed exchange rate system was introduced. Okay, now next thing is that World Bank actually classified the economies on the basis of their per capita income. Okay, like how much the economies per person is earning. What is per capita income? Per capita income simply means the per person income. Per capita income means per person income. And how to calculate per person income? It is simply an average of national income. So simple formula we have, the national income divided by total population. National income divided by what? Divided by the total population. It is known as per capita income. So per capita income simply means the average of your national income we are calculating, and in this per capita income we are saying what? Simply that whatever the per person is earning, that is your per capita income. That's the average. Like if let's say if we're talking about in India, per capita income is 50 rupees. It means every person who is earning in country, he or she minimum earning 50 rupees. That's the per capita income, the per person income they are having. So now the per capita income, if we talk about here, on the basis of that, World Bank have divided economies into four categories. Okay, this classification given by World Bank on the basis of per capita income, and World Bank has divided economy into four categories: low income, lower middle income, upper middle income and higher income. These are the four categories. So it has said that India is lower middle income category, because World Bank criteria says those economies who have per capita income between $996 and $3,895, they will be lower middle income countries. And India's per capita income was $1,891. That's why India is a lower middle income country. Okay, so remember, World Bank classified the economies on the basis of per capita income in the 4 categories. The 4 categories we have: low income, lower middle income, upper middle income, and your higher income. Out of these 4 categories, India's rank or India is at the lower middle income because India earns $1,891 as a per capita income in the year 2019. And the eligibility to become the part of lower middle income economies category is $996 to $3,895 per capita income. Okay. Now, so if we talk about Indian economy, we have discussed in context to purchasing power parity. India's rank is 3rd after 2 countries. Acha, which country is at the 1st rank and which country is at the 2nd rank? So in purchasing power parity, India's rank is 3rd. So what about the 1st and 2nd country? Very good. First is USA and second is China. Correct. Now, so India in the purchasing power parity is at the 3rd rank. But when it comes to the per capita income, India's rank is very low. Hana, in case of per capita income, India's rank is very low. So, if the per capita income is low, it will create high level of poverty, high level of unemployment, and high level of illiteracy. Hana, if the per capita income is low, it means it will create a high level of poverty, unemployment, and illiteracy. Like why? So per capita income we have discussed, it simply means the per person income. If per capita income is less, it means what? People do not have jobs. If people do not have job, it means obviously unemployment is more. Okay, and if per capita income is less, it means people do not have money. If people do not have money, they will be poor. Okay, poverty will be increasing. If people do not have money, they will be poor. And if they are poor, they won't be able to get the better living standard or literacy rate. So their literacy rate will be also going to what? Decrease. Yeah, their literacy rate is going to be decreased. Because if they do not have money, they won't be able to get the education. So if the per capita income is low, it will increase unemployment, it will increase poverty, it will decrease your literacy rate. Okay, so that's what we're talking about here. The lower per capita income mainly attribute to the high level of poverty, high level of unemployment and illiteracy. All these will be there because of the low per capita income. Now, a number of factors are there which actually explain or influence the nature and characteristics of Indian economy. Okay, these factors are important. Some of them, these factors are this. First, we have here that in India, you have a low per capita income. And that's true. We have a low per capita income. Okay. Second, we have rapid population growth. And if you talk about India in January 2023, India became the most populous country in the world. India became what? India became the most populous country in the world. It means in the maximum population is in India from January 2023. India is at the top. Okay. Now, high rate of unemployment, underemployment, disgust unemployment is there. So when it comes to your India, there is a high rate of unemployment. Now, what is unemployment? Unemployment is simply a situation where a person is there who wants to work, who is skilled, who is physically and mentally fit and looking for a job but is still not finding a job. So unemployment means simply when there is a person who is physically fit, when there is a person who is mentally fit, who is a skilled person, who wants to do job, who is looking for a job but not finding the job. That situation is known as unemployment. Okay, and that's increasing. The people of our country, they want to work but they do not find any job in the market. Second thing is there underemployment. Underemployment means you have to settle down for the less what you actually deserve to. So let's say because in the country there is a crisis going on, there is a recession going on, so you have to take a job which is less according to your qualification. So you deserve a better qualification job, but you have to settle for the less. That is known as underemployment, and this happens in India. Maximum people who are actually qualified, they have to simply be what we can call it. They have to settle down for the less level job of theirs. That is underemployment. Then there is a disguised unemployment. Disguised unemployment means simply when you have a surplus manpower. Surplus manpower means what? When you appoint more people in comparison what you need. That's a surplus manpower. So let's say, for example, in Adda 24/7, there are 4 faculties of IEIFS subject, for example. Adda 24/7 hire 4 faculties of IEIFS subject. But we have only one batch. We have only one batch of IEIFS and we have 4 faculties of IEIFS, for example. Now what happens? Obviously, the single faculty will be there who will be taking the classes. The rest 3 will not be able to take classes because there are no other batches available. In that situation, those 3 faculties are actually a surplus manpower and their productivity in the company is 0. If you send them for a leave for 1 month, it will not affect the productivity of the company because there is only one faculty who were taking classes when they were here, and the person will still keep taking classes when they are on the leave. So those people who are actually employed but not having any productivity, they are 0 productive in the business, and that's what it creates, the surplus manpower, and they are disguised unemployment. Or you can call it a hidden unemployment, because in general you will see they have a job but they have a 0 productivity. So that's why it is also known as a hidden unemployment. Clear? Can't understand the class timing. In the end of the session, I will let you know from where you can check the batches timing, okay? In the end, I will show you from where you can check your batch timing. A promotion, actually, that's a code written and the screen is somehow the PPT somehow is cut on the screen. That's why you are only able to see the discount word. Okay, chalo, next. Next, we have excessive reliance on the primary sector. We are excessively focused or we are dependent on the primary sector. Excessively we are dependent on what? We are dependent on the primary sector. As you know, agriculture sector is the primary sector, and maximum populations are dependent on the agriculture sector, and maximum people's income dependent on the agriculture sector. So we are excessively reliant on the agriculture sector, and there is a vicious cycle of poverty. Poverty trap is there. Once a person became poor, it's very hard to get out of that poverty trap. Okay, and rising unemployment. Unemployment is keep rising in the economy. So these are the certain factors which influence the nature and characteristics of Indian economy. Do remember them. Okay. Next we have, in starting, if we talk about India, used to be known as an agricultural economy. India used to called as an agriculture based economy, or Krashi Pradhan Desh we used to call it. So India used to be the agriculture economy. Achha, if I ask one question from all of you, that right now, what kind of economy India calls? Can we call India agriculture based economy, or we should call it a service based economy or an industry based economy? So what category of Indian economy nature is there? What is Indian economy right now? Agriculture based, industry based, or a service based? Okay, so what happened if you want to call any economy a agriculture based economy or any kind of other economy? There is a criteria that have been given, and that criteria said that if you want to call an economy a particular sector based, first you should see that 50% of national income will come from that sector, and the second is the 50% of employment should be generated from the same sector. If you want to call India an agriculture based economy, you can call it, but only if agriculture is generating more 50% income of our country, minimum 50 or more than that, and also providing job 50% in the country or more than that. If any particular economy fulfill these 2 conditions, it will be known as that particular economy. So Right now, India is not agriculture, nor a service, or nor a industrial base of economy, because the agriculture sector provides us the employment of 48.9%. That's not even a 50%. And the income we are earning maximum from the service sector, that is a 52.8%. It's very obvious that both the countries, when we talk about India, when we talk about India is not fulfilling these two conditions to be called as a particular sector economy. Okay. So do remember this criteria. 50% of national income, this is a minimum limit, like minimum 50% income should come from that sector, or minimum 50% employment should be come from that sector. So India used to be the agriculture sector, but after independence, India's share of agriculture is keep declining. Okay, and the industry and service sector contribution is increasing. So you can see in 1950, agriculture was dominant sector and 53% of GDP used to came from agriculture. 16% from industry, 30% from services. And now you can see India in the year 1881, you can see service sector became 38, agriculture became 36, and industry became your 25. So India's agriculture share is continuously falling and industry and service share is continuously increasing. Okay. So according to statistics, you can see less than 1/6 of Indian was actually literate at the time of British era. And Britishers have actually taken benefit out of it. So 1/6, or we can say 1/6 of Indians were literate only. And at the same time, Britishers have introduced the Western education system in the country. So Britishers have developed railway sector in the country, but not for India's development. They have developed the infrastructure sector or the railway sector just to take raw material from India to abroad, just to exploit the raw material. Okay. And also they wanted to introduce the Western education system in the country, not to educate us, but to make sure that the Indians will not be of British culture, will not be able to adopt the British culture as well as the Indian culture. Like if we introduce the Western education system, they won't be able to learn English as well as they won't be focusing their own culture. That was the objective of introducing Western education system in the country. So in 1867-68, this is the first year when the national income was first time calculated in India. So Dadabhai Naoroji, who is known as, or he is the first Indian who became elected member of British Parliament. Okay, Dadabhai Naoroji was the first person of Indian citizen who became the elected member of British Parliament. So he calculated the national income in the country for the first time, and he wrote a book that is Poverty and Un-British Rules in India. In this book, Dadabhai Naoroji have said that in India, the per capita income is 20 rupees per person in 1867, and the national income was 340 crores. The first estimation of national income and per capita income in India done by Dadabhai Naoroji. He also defined the drain wealth theory in his book. He also defined the drain wealth theory in his book. Okay, who have defined that? Dadabhai Naoroji have done. So in the Poverty and Un-British Rules in India, the drain wealth theory we are talking about, Dadabhai Naoroji have told us that this is the economy from where the wealth have been drained. Like people are taking money from India to abroad, or from India to Britain, we can say. So Britishers were doing what? They were taking raw material from India to UK. They were taking money from India to UK. And that's what the drain wealth is. Drain wealth means the wealth of your country have been drained by the Britishers. So money used to be transferred from India to UK by the Britishers that have introduced the drain wealth theory. Okay, and because of that, the per capita income or national income of India was always low. So you can say, according to Dadabhai Naoroji, national income was 340 crores, per capita income was 20 rupees per person. That's important to remember that. The name of book also remember, The Poverty and Un-British Rules in India. Okay, now, in 1948-49, the per capita income was 142 rupees. Atkinson have given the per capita income 172. Horn has given 158. And if you talk about Curzon, he have estimated 148. At the time of 1947, we got the per capita income 250 rupees per year. And according to Angus Madison data, this was the per capita income and national income of the country. So you have to remember the data of Dadabhai Naoroji only, not every data you have to remember. Okay, every data that have been given by Dadabhai Naoroji and Angus Madison, these two data are very important. Okay, now you can see here, India used to contribute on the global income 23% in 1680. That left only 3% in 1947. So India used to contribute 1680, 23% of global income, and it became only 3% in 1947. Similarly, India used to contribute 33% in the global trade, which remained 3% at the time of 1947. These two data are very important. Remember that global GDP, or it can be called as a global income, then global trade. Okay, so in global GDP, India was at the 1600, used to contribute 23%. In global GDP or global income, you can call it. And at the time of global trade, they were contributing 33%. Okay, now, in the year 1947, when Britisher left country, it from 23%, it remained 3%, and from 33% also it remained 3%. So now you can understand how Britishers had exploited the Indian economy. Okay, so India's contribution in global GDP and global trade decreased from 23 to and 33% to 3% respectively. This is very important. Remember this data. Next. If we talk about history, if we talk about the British era, you can see in the British era, in the early British period, it was 1600 to 1757, the first phase. The second phase was from 57 to 1857. Then the third phase was from 1858 onward. These are the three phases of British era. These are what? These are the three phases of British era. 1600 to 1757, 1757 to 1857, and then 1858 onwards. So first we have here the foundation of the East India Company in 1600 AD. It marks beginning of the first phase. Okay, if we're talking about the foundation of East India Company, the first phase of British era was this, when the East India Company was founded in India. Okay, and this company have two goals. The first goal was procure the raw material for their factories, and second, find a market for their completed goods. So East India Company have two goals only. The first goal was whatever raw material is there in India, collect that raw material, procure that raw material, and to take this raw material to UK. That was their first objective. The second goal they have, that with that particular raw material, produce a finished goods, produce a final goods, and then find a market where you can sell these goods. So they have only thought about their growth. They have nothing to be done with the Indian economy. They just use the raw material, produce the final goods, and was selling goods to abroad and to the other countries. So India's global trade reduced because they started producing goods in their country and started doing export from there. Okay, and also India's GDP decreased because the production was not used to be done in India. They used to be done in the UK. So they have taken raw material from India for their factories, and they have sell those completed goods, final goods or finished goods to abroad, to other countries. So that's why India's contribution in global GDP and global income keep falling. Now, the second phase began with the Battle of Plassey, which marked the turning point or colonial control in India. So this time was marked by the Ballantine robbery by the East India Company. So they have done a lot of exploitation as a trade. They have exploited the land revenue policy. They have been dishonest. They have been unscrupulous companies officer and the vast fortune. So East India Company have done a very unethical work in the country, and they have exploited each and everything. The labors, the money, the trade, everything. Okay. Now, next, the third phase is started in 1857 when the British quashed spoil machinery. The British Crown dissolved the company and assumed exclusive control of India. So here in the third phase, the company was dissolved, and this period was marked by colony and exploitation through deindustrialization, agricultural commercialization, wealth drain, and westernization of Indian education system. Okay, so simply there are certain things that happen. They have dissolved the British East India Company, but they were simply doing what? They were keep exploiting India through deindustrialization, by making agriculture your commercial activity, by doing wealth drain, and by doing the westernization of Indian education system. So these are the way in which third phase they do exploitation of India. They did exploitation of India. So first, the global GDP was 23, remained 3. The global trade export used to be 33, remained 3. Now, the Britishers introduced the Zamindari, Marwari and Rotari system in the country, and they have introduced that to take excessive land tax from the farmers. So these systems have been introduced by Britishers in India just to take more and more taxes from the farmers in India, and that have made farmers to leave their lands. Like they started charging more and more tax on the lands from the farmers, and when the farmers were not capable of paying that much taxes, they have purchased their land from them, and the farmer who used to be the owner of the certain land, they became the labor of agriculture market only. They were working on the wages only. So that's what Britishers have done by introducing these three systems and started taking excessive land from the farmers, land tax from the farmers. And they have done deindustrialization in India. Whatever India developed, it have been deindustrialized. Like because of the fall of Mughal Empire, the decline of Indian agriculture was there because the farmers was at the situation they were not able to pay taxes, so they were not able to produce the goods and services, and they were not left with the money, so they have sold their agricultural land to the Britishers. Then increase in nominal wages have been done. Reduction is there in the Indian textile competitiveness also, because they have deindustrialized India's economy, India's industry. So by that, India used to be the competitive in the global market. Taken money from India, they have taken resources from India. So the competitiveness of India's textile market was reduced. Okay, then increase in transportation facility. They increased transportation facility just to exploit raw material from India. And all these things have contributed to make deindustrialization in India. And that have been done by Britishers just to exploit the Indian economy's resources as well as the Indian economy's trading as well as the labors. Clear? Let me know till now everything is clear. Nominal wages means simply the wages that the employer, it's a kind of money wage. Hana, the salary you can simply say. A kind of salary which is not adjusted with the inflation. Like inflation is what? When the prices of goods and services is rising. Let's say right now, I have my salary 105 rupee. Okay, and the goods and services I am purchasing of 100 rupee. So I am capable of to purchase this because I am earning 105 rupee. Now what happened? My salary have been increased by 110 rupee, but the inflation have been increased at 120. So will I be capable of purchasing goods? Obviously not. So nominal wage means when you do not check what is the actual inflation situation, but you simply increase the nominal wages. You simply increase the money of there. Okay, like we used to give you 105 rupee, now we will give you 5 rupees extra, that is 110. But it is nothing related to the inflation. They are not calculating your inflation situation while deciding what to pay to you. Clear, Ravi sir? So simply changing the salary of employees without adjusting the inflation situation. Now, the fundamental goal of introducing Western education to India was to generate a group of Indians who neither good in English nor in Indian culture. So they have introduced the Western education system just to make Indians bad in both, in English as well as in Indian culture. Okay. Now the certain important points are there, that the wealth drain have been defined by Dadabhai Naoroji, in which he said unilateral movements are going on. Unilateral means one-sided movements are going on of riches from India to Britain. So money is going from India to Britain, but not coming in any form of economic, commercial or material return. So they were taking resources from India, they were taking money from India, but they were not returning anything to India. That was the wealth drain. Sorry. So one-sided transaction used to happen from India to Britain. Nothing was coming back to India. Now, it occurred through the remittances. Remittance means they used to transfer money from India to Britain. Home charges. Home charges have been named as the salaries. The salary we used to pay the Britishers. That's the home charges. And the transfer of revenue from the private business or investment, among others. And then they used to transfer their company's profits to their own countries. Hana? These are the way from where India's money have been taken to abroad. Now you can see in 1783, Edmund Burke explained the mechanism of your drain, economic drain and rising poverty in India. In 1776, Phillips Francis studied the drain economy and classified into the 4 broad streams. So this happened in the country, the unilateral transactions was used to happen. Now Angus Madison data, again a very important slide. So 23% was used to be our contribution, that remained at 3% only. Now Clave took £250,000 from India for himself, as well as he have took the Jagir worth of £27,000 a year. This is the fund that he took from India to abroad. Then the Britishers' salaries were very high. The Viceroy used to take £25,000 in a year as a salary, and the governors used to take £10,000 as a salary in a year. Okay, now the simple starting salary of engineering service for Britishers was £420. That was 60 times more than the what Indian laborers were getting. Okay, if they are getting 60 rupees, we are getting 1 rupee. That kind of situation was there. Times more than the Indian labor. So under the rule of East India Company, when East India Company was in the country, they have taken 3.5 million pound in 1856 from India to abroad. It means to their country. Okay, that was the capital that East India Company have taken from India. Now, private remittances used to be there from 1858 to 1947. The colonial government official transferred the money to UK, and that was named as a home charges. The private remittances they were doing, that were named as a home charges. Apart from that, Dadabhai Naoroji has said that India have paid 10 crore pounds from 1829 to 1865 to the Britain as a house cost, as a house charge. And this increased by 1930 to 40 to 50 million pound in a year. So you can see how much money the Britishers were taking from India just to provide us the services, or we can say just to exploit the labor as well as the raw material. Now, the macroeconomic comparison have been given. Now, what is macroeconomic? If you remember, we have discussed this yesterday only. Macroeconomic means when you study the whole economy. So, whole economy changes which happened between 1680 to 1947 in India and in Britain. That comparison have been given. So you can see the per capita income, that all the values are in dollars. Okay. So the per capita income GDP of India used to 550. It increased to 618. This is 1600. This is 1947 when Britishers left. And in case of UK, their per capita GDP was 974. They increased to 6,361. Now you can see what's the increase there. Population of India for 13.5, it increased to 41.4. UK 16.71 lakh and it increased to 4.97 crore. Now, GDP in dollars, India, when Britishers came to India, India used to have the GDP of 74,250. It only increased to $2,55,852. When UK came India, they had only $6,007 GDP, and this increased to $3,14,969. So now you can see what Britishers or the Britain got from India. Okay, apart from that, when we compare more, you can see that India's per capita income in this period increased only 12%, but Britishers' per capita income increased 55%. So our per capita income increased 12%, but their increased 55%. India's total GDP increased 2.44 times only between this time, from 600 to 1947. But Britishers' GDP increased to 52 times. Okay, Britain's GDP increased to 52 times, or India's GDP only increased to 2.44 times. So that was the situation of Britishers in India and how they exploited the country. Now the economy till 2008 and after 2008, this period we will discuss in the next class. Now let's practice certain question on whatever we have discussed today. So all these situations we will cover in the next class. Okay. Now, the first question based on today what we have studied is this. What is the India's category in case of World Bank classification? So read the question and answer the question. Okay, very good. India is a lower middle income country. Very good. A. Next question is, acha, this we haven't covered yet. This we will discuss in the next class. Next question we have, the low per capita income mainly attribute to high dash. Very good. It will increase poverty, unemployment, illiteracy. A. Correct. All three will be increased. Now, contribution to which sector is maximum to Indian economy? Which sector contribute maximum income to Indian economy? Okay, it is service sector. That is the tertiary sector. The tertiary sector gives us the 52.8% national income. Okay, so right answer is C. Now, this we haven't discussed yet. This we will do in the next class. Next question. Yes, this. As per Angus Madison database, India's share to global GDP was dash in 1600. Okay, because it is a global GDP, it was 23%. C option is correct. Next. According to Angus Madison database, what was the contribution from India and China in the year 1000 AD? The India and China contribution in 1000 AD was? Very good. Again C, 50.5%. Again C. Next, this we haven't discussed yet. Okay, next question. What was the contribution of global trade from India in 1600 and then in 1947? Very good. It used to be 33% and now it is 3%. Okay. So this is what we have discussed today. So do revise the content before the next class. Hana, also one more thing I want to inform you all. Those who want to enroll in the crash course, So those who are watching us on YouTube, this is the last demo available to you of the crash course. From tomorrow onwards, classes will going on only in the paid batches. If you guys want to enroll, just download the 24/7 application, go to the JAIIB CIB section, then JAIIB May 2024, and you can see Mahapack have double validity, and this offer is going to end today at 12. And double validity will be removed, as well as the 81% discount will be removed. So if you want to enroll before 12 p.m. Okay, now this is a crash course. You will get 200-hour live classes. You will get 276 topic wise and full length mock tests. You will get ebooks as well. After that, when you scroll down, you will find a study plan. Okay, click on the study plan. From here, you guys can also check at which date which subject is going to start and what is the timing of the batches. Okay, so I will show you one PDF here. That's a IE/IFS batch. The IE/IFS batch is started from 18th of March, and the time of the class will be 8 to 9 a.m. Okay, and similarly, all the subject timing, all the subject dates, you can check from here in the study plan. Okay, everything is given here. After checking all these things, you have to click on the buy now option. Enter a code here that will be Y496. Click on the apply. Once you click on apply, you will find 80% discount here, but 1% additional discount will be available. If you use the coins, 81% discount, 6-month validity is there. Code will be Y496. This is your crash course. Okay. Second, if we talk about here, you will find that Mahapack have the much better benefits in comparison to individual batch. Once you enroll in the Mahapack, you will get the comprehensive batch, you will get crash course, you will get the numerical batches, you will get the revision batches which are going to come in the April month, you will get your power pack batches of the month of May. So all the upcoming batches will also be provided to you once you have enrolled in the Mahapack, and all the batches which are already going on, the old batches will also be provided to you. Okay. So now you will find all these benefits are there. Apart from that, mini and Maha marathons are also there in the Mahapack. So Mahapack have a much more benefits for you. And to enroll, click the code Y496 and apply. Once you apply, again you will find 81% discount here. And in Mahapack, you will get 1 year validity, 81% discount. If you use the code Y496, you have to pay only 5,700 here. After paying 5,700 rupee, you will get a comprehensive batch, crash course, numerical batch, revision batch, your upcoming power pack batches also, in 5,700, and it will be available for 1 year. When you go for the crash course, you have to pay 3,700 for a single batch. So now we have discussed the money value. When you have to pay less money and you are getting more benefits, that means your money value is increasing. So that gives you much more benefits here. Okay, the class PDFs are uploaded by me already. The last class PDF already uploaded, from where you can check your classes PDF. Simply, once you have enrolled here, just go to the crash course. Once you have enrolled here, you will find all these classes. When you go to the live classes, let's say this is an IE/IFS class. When you go here, you can find, right now it is showing logged to me because I have not purchased the batch, but you guys have done. So here you will find, like on 18th March, we have a class of 1 hour, 3 minutes, 15 seconds. So you will here able to check that class. The recording will be available at the same place. You will find the practice book. So daily class wise PDFs are also uploaded by the faculties. Do not worry about it. You can check here. Okay. And Mohanson, at this place you will find the PDF of today's session also. Okay. So you can check here. Every day class will be uploaded here. The recording as well as the PDF. Okay, now let's end the session here. See you all tomorrow at the same time, and from tomorrow onwards we will be discussing the session only in the paid batches, not on the YouTube. So if you are thinking about enrolling, do it today by 12 p.m. so that you can get the 81% session here. See you all tomorrow at the same time. Take care, and also revise the content which we have covered today so that you will not have any doubt in the next session. Okay, take care everyone. Bye bye. Have a good day.